Welcome to Power Charting. I'm Bruce Fraser, your host. We have a very special episode today. We are going to look out at 2021 and have, with the perspective of 2020, which I talked about last week in the prior episode, we're going to extend this current market and look into the new year and see what possibly we can expect. So with that, I have a very special guest, and it's Roman Bogomazov. Roman, welcome.
Well, Bruce, as always, happy to be here. Happy to talk with you about the markets. And I think this is going to be a very, very interesting session.
Absolutely. And we've been sort of planning out what we're going to do here, and I do want you to take the time to go back and look at last week's episode, just to give you some perspective of how, especially the early part of the year, unfolded with the COVID decline, and then the beginning of a very important uptrend. And for review, Roman, why don't we just look at the year? Probably one of the most important events of 2020 after the big COVID decline into the March lows was the building of a base, which occurred very quickly, building a cause, and then having a most epic uptrend, especially in the Nasdaq 100 stocks. The other indexes, the S&P and the Dow, all did very, very well, but they paled in comparison performance-wise to what we saw in the Nasdaq 100. This chart on the top left really demonstrates that, and we put some classic Wyckoffian trend lines on this chart. And originally this chart was shown earlier in the year, and you can see the references to where these charts were published. So we've been using these as working charts throughout the year. That reverse use of trend lines there shows with the trend channel, the oversold line really shows all of the really classic places that you could trade off of this channel on the way up. A buying climax occurred, really an epic buying climax, into the beginning of September. And at that time, we talked about in the Wyckoff market discussions and also in power charting, a range-bound condition forming, and that occurred with the very sharp reaction into the automatic reaction. And now we have a range-bound condition, which we're going to talk about at length. The other chart I would like to show you are these 2-point figure charts. The one on the top right, which was constructed back in March, shows a completed accumulation structure that was countable, building a cause for a subsequent move up. And that in the Qs showed a count up to 256, 264. And then I extended that count. Once we reached those levels, I extended that count out further, which is a common practice in point and figure analysis, counts up to 292 to 305. The chart below is an interesting construction on point and figure. It is a percentage scale point and figure chart where each box in the scale is 2% in this case. And that count, which we flagged on the top chart on the left, goes up to 10,683 to 11,564. So it was signaling at the time of the March lows a very important cause being built for an important move up. And it flagged the move that we had coming in the Nasdaq 100 up into the buying climax highs. Also, that count could be extended and goes as high as 13,023. Now, this is in the Nasdaq 100, and this is based on 60-minute data. Roman, your thoughts?
Well, this was beautifully established, Bruce. So when we were discussing, how we're going to go about this session, we said, let's set up the problem. So what is the problem right now? The problem, we think, is that there is a kind of like consensus view that we are done with this bull market and that we are in the extreme overbought condition, and that there is really nothing beyond the targets that we have right now, or the consolidations that we've just experienced, or the way how the price behaves most recently. And this could be the truth, but our argument today is going to be actually the opposite. We're going to say that we probably not only experiencing the first parts of the next secular bull run, but we're also somewhat even short-term bullish rather than short-term bearish. And Bruce, as a first initial thought, let me just kind of like throw this on the table. I think that COVID reaction being so aggressive and deep and fast, how it happened, created that extreme oversold condition. So we went from the extreme overbought condition before to the extreme oversold condition really fast. And now we are at the extreme overbought condition again. Um, this type of movement, and especially in sentiment, would create those extremes. And at some points, they would be suggestive of the top and the bottom. But at some places, this is just a condition that's going to persist for some time. And still, we might have a potential of going even higher from here.
And in Wyckoff, the way we think about going into an extreme oversold condition, which you can see described there as a throw under and oversold in the COVID decline, throw over and overbought in the buying climax area, is that we look at this as a going into a range bound condition from a trending condition, which needs to then build a cause for another move. In the case of the throw under and the oversold condition, that built a cause, a cyclic cause for another advance. And in the case that we're in now, we're seeing a very important cause being built since September, which we had talked about at the time and said we needed to build a cause. And this is what we're going to talk about as we go forward in our discussion.
Well, let's do exactly that. Let's quickly look at the area of this reaccumulation. I'm not going to spend a lot of time on this, but basically we want to establish what is the bias of this formation. So we're seeing that the selling comes right away. It's very aggressive. The volume signature has increased on the first initial bar, on the change of character bar. So this is undeniably selling, especially after the climactic top. But what happens right after is very interesting. The next day, we have a more increased volume signature on the bar that has such a big demand tail. So the buying comes right away. Then the next bar is slightly smaller in spread than the first initial sell-in bar, and yet the volume signature is slightly higher, so suggesting that demand is still present even though the price goes down. Next bar, same effort as the previous effort at the top, and yet look at the expansion of the result to the upside. So demand is in full control, at least at this point, and that stops the price from going further down significantly. Then there is another zone of buying that we see. It's at the bottom. So we kind of could see that institutions are selling in the red zone and buying in the green zone. So all of the buying occurs around the bottom, around the green zone, and then selling, and specifically rotational selling, and specifically from Nasdaq to other indices, from growth to value, happens in the upper parts. So something extremely interesting and important happens right here. Selling occurs and then buying comes in right away. We see this from the volume signature and diminished spread result, but it happens higher, at the higher level. If this level right here was 1/2 of this range, we are finding support and we're finding buying right at that level. So that suggests that we're going to have some kind of continuation after a very pronounced buying on the breakout bar. And then we stay, and then we start occurring, supply again, and yet look at the absorption on the way up. So we could see a lot of buying and selling around this whole structure. So we're thinking that the bias is bullish. If the bias is bullish, then we have to look at the much larger picture, which is, well, where are we in this trend? And I think that this area right here, Bruce, is extremely important because it just shows this small deviation around the mean. And this is what defines the stride of the main uptrend. If this is the main stride, and we've kind of deviated, derailed from that stride into the more horizontal price action and into the oversold condition, we need to catch up to the mean. And this means higher prices. This means an up move. And thinking about just even classical technical analysis definition of the continuation pattern, which is the triangle, apex, hinge, however you're going to call this, it resolves itself as a continuation move most of the times. And usually there is some kind of acceleration after this move. When we look at the targets here, we're around maybe like 15,005 for the Nasdaq. And another point here, and we will be discussing this with Bruce, the first leg of this move up suggests that after a distributional character of the market into COVID-19 reaction, we actually had a COO type of accumulation, where COO distributed the stocks on the way down and then bought the stocks on the way down and on the way up. And that produced the new secular runaway momentum rally, which is just the first rally in maybe a multi-legged uptrend, secular uptrend. And usually we're going to talk about the momentum. Momentum is going to be extremely strong, and that's what brings us very quickly to the overbought condition. But as we see from the trend work, we're actually in the oversold condition relative to the mean of the stride of the trend. Bruce, your quick thoughts on this?
This is exactly what a reaccumulation structure is designed to do. Sideways trading ranges tend to discourage traders. They go looking for other places to trade and they step away. This is a most bullish kind of a structure because it's a way to discourage traders without creating a lot of price damage. And this is what a composite operator type or the CO type will tend to do as you work off an overbought buying climax situation. So this is an incredible case study in addition to being in a very important price structure.
Well, then the next question becomes, well, we had the PNF counts here. Would they confirm, would the current trading range PNF counts confirm that original PNF count? And Bruce has shown to you guys, and this is very important. Look at this formation right here, and look at this formation. The PNF count of this area right here is smaller than the PNF count here. So I know the answer to this, but I want to go to the expert, who I think is the best horizontal, count expert in the world right now. Bruce, why? Explain it to us. Why is it on the vertical chart? The reaccumulation looks so big, and yet the count of this area is much smaller than the original accumulation in the smaller vertical consolidation.
In point figure construction, you go from column to column based on volatility. You don't go to a new column unless you have a certain predefined amount of volatility in the opposite direction to the prior column. In vertical charting, you get a new column every time period, every day, every hour, every week, however you're plotting. So in the case of this accumulation structure at the bottom of the COVID low, there was a tremendous amount of volatility, and that volatility just kept playing out day after day after day, and you're just building huge amounts of count. The idea of point and figure is that volatility is what drives stock from weak hands to strong hands in an accumulation, a base, and drives stocks from strong hands to weak hands in a top or a distribution. So there's the quick answer to that.
And look at this trading range, right? This is exactly what Bruce is talking about. On the vertical, this reaccumulation looks much, much larger as the formation, whereas the original accumulation looks very, very small, condensed. And here on the PNF, it's different view. Well, if we would look at the counts what we are looking for and what RD Wyckoffian told us, to do with the horizontal counts is to look for confirming counts. So the original count here is around 15,005, 16,000, and then the reaccumulation count that we take shows us the same target zone. It doesn't have to be the same. It doesn't have to be the same numbers. It has to be in the same zone. So this is what confirming PNF targets are. We're seeing that with the current bias that we've just defined as being a reaccumulation, we are potentially going to the same target zone as their original accumulation. And looking at the long-term vertical chart with the idea that we need to catch up to the mean, this is the same target. If we would catch up in the same way where we have some kind of climactic run into this resistance that defined the overbought condition of the market stride, we need to end up somewhere here around 15.5, 16,000, and that would be the next overbought condition and possible buying climax. Bruce, what are your other thoughts here on the PNF chart?
Just that we can extend count objectives, but we can't necessarily know the means or the path by which price gets to those price objectives. It could happen very quickly. It could happen slowly. It could happen in a stair-stepping fashion with multiple additional point figure counts along the way. And so we have, what's really heartening is that we continue to have higher price potentials from these 2-point figure counts, and that the uptrend appears to still be intact.
But if we would speculate as to how the price could potentially go, we usually would go to the price structural analogs. So this is not necessarily what Wyckoffian did himself. It's just something that we've incorporated into our work. And the behavior of the herd is always going to be the same. People are always going to react, and even professional people are always going to react the same way because they are so conditioned at the points of the extreme oversold condition, extreme overbought condition, extreme speculation, or extreme capitulations. So here is the analog from 2017-2018 climactic run. This happens right after the 2016 presidential election. And we are kind of comparing the lows a little bit here. What happens afterwards? So 88% up on this first rally, which is much more than 53% off the 2016 low that we're not even showing here. But the move up is somewhat similar. We are going into the overbought part of that stride, and then we have a change of behavior, Let me just clean this up a little bit. Look how similar this is. First, a change of behavior after the climactic action, which brings up buying almost instantly. The secondary test is somewhat weaker, so we're seeing that weakness going into the secondary test, which produces a lower low as the result of that weakness. The lower low does not show a lot of selling, which leads us to the rally. Now, the rallies are somewhat similar and different on these two charts. The top chart is showing upthrust action, where we indeed have a temporary commitment above and then reversal back. But in the current picture, we're seeing a lower high, which is a failed upthrust action. So this lower high suggests that the next reaction is going to be a little bit stronger to the downside than the one in 2017-18, and we see exactly that. 2017-18 reaction comes to about 1/2. This one almost tests the lows of the prior minus sign of weakness. Then a rally, again to the resistance, here it is. And this rally is a little bit more dynamic than the one before. We see that as well. And then consolidation with the retests that we're seeing in this area and this area right here. And then a very gentle breakout. Please note that there is no like a big momentum bar that breaks out the apex. It's a very subtle move up and then still consolidation around this area. So I mean, potentially we could consolidate here, stop a little bit, and then produce that short covering that is just propelling the market with some kind of conviction up, and everybody jumps back on the board in order, to reach, higher targets. Bruce?
I have to just say, Roman is a fabulous teacher of the Wyckoff method, has taught for many, many years. He has a new teaching cycle coming up at the beginning of the year, and his first classes are always free for all to attend. If you go to my current blog, I just wrote a new blog this week, and go to the bottom of my blog, there are links for registration to attend these free webinars, which are the first classes of his sessions. And you'll absolutely love the time that you spend watching Ramon teach these methods. So just go to my blog, go to the bottom, sign up for these. It's well worth your time.
Well, Bruce, thank you. You're so kind and really appreciate this. Well, let's go even into a much deeper thought and more controversy, Bruce.
Oh,
Well,
controversy. I love
yeah,
that.
yeah. So we've talked a lot, and you brought to our attention so many times something very, very interesting as a picture here. We're looking at the put-call ratios, and you were talking about how we were oversold here and overbought here, and now we are extremely oversold in the oversold condition right now. What does it mean usually, as we interpret this data?
Yeah, I think this is just an interesting thing. This is actually what I wrote the blog about this week, so you can see this chart there and study it. I just want to make this point that sentiment does have an influence on the short-term trends in markets, and you can use these equity put call ratios. In this particular case, you can see that we have the lowest reading. This green line is the 10-day moving average of this data. I like to just look at the 10-day moving average. It's the lowest reading. That's the most optimism. It's the most bullish speculation in options of the year. And so this does set up the condition for the market to need to pause or to correct to frustrate all this bullish speculation that's been taking place. And so as we've been watching this, there is a bull case here, but we are at the top of a trading range, and we have this extreme ratio of call buying to put buying. So I'll just leave it at that, and we're going to talk more about it as we move forward. Ramon, your thoughts?
Yeah, so it's very interesting how this condition, first of all, persists. For instance, when we had the same type of the condition of the extreme overbought condition in the market, or extreme oversold here on the put and call ratio, it resolved itself, pretty fast. We broke the 10-day moving average, and then it went up. With that, the market just crashed. Here we like residing, we're living in this condition, and that creates more and more speculation because people are trading more and more options. So is it possible that this condition could actually persist? Because the main idea right now in the marketplace, from people that we hear, is that we are actually in some kind of uh, potential top formation. So Bruce was talking about a potential reaction in the context of the uptrend, of a larger uptrend. But people are talking, about the potential top informations that would produce a significant move down. So for this type of analysis, we would usually go to the historical data that shows us the analogous type of takeoff moves from the secular low. Obviously, the most memorable of them is 2009 low that leads to the initial rally, and then we have cyclical reactions. I mean, look at all of them, the ones that were, more or less pronounced on the way up. All of those cyclical reactions and cyclical lows within the context of a much larger trend. And what happens with the breadth of the market? there is this runaway momentum rally that is showing that more than 90% of the stocks are above their 200 moving average. Well, when does it happen? Obviously, after the distributional characteristics and the downtrend, when everything is so oversold, everything is starting to rise, institutions are buying almost everything just with rotational characteristics, and then that number goes quickly up and stays there for some time. So everybody's noticing that it's there in the area, but we could have time when it just stays up like this from July to April. That's what was happening. What did happen with July, April market action? It was actually going up. So we're exactly at this point, Bruce. What are your thoughts on this?
This is such a great indicator. It's one of my very favorite breadth indicators. And the incredible plurality of stocks in the New York Stock Exchange that are above their 200-day moving average at this time is I think, a very bullish internal structure of the market. And it takes a long time to work off such a bullish plurality of stocks that are in confirmed uptrends. And this occurring now suggests that there are higher prices ahead for the market. That doesn't mean you can't have corrections along the way, but that the uptrend is being confirmed. Back in January, February of 2020, right before the big drop, there was a lot of deterioration in the internal structures of the market and breadth and bullish percent, these other indicators that we've looked at. We looked at those at the time and warned that they were deteriorating. And you can even see it on this chart here back at the beginning of the year in the first quarter. You can see the falling off of the breadth. Well, now you have the opposite situation occurring. You have a situation where you have the vast majority of stocks that are in strong bullish uptrends. And this, I think, bodes well for the future of the market.
Consensus right now is that the market is overbought. Therefore, an expectation for a top. Consensus is usually going to be wrong. So a contrarian thought to that, and we always would like to be contrarians, especially at the inflection moments, is that it's going to be a continuation and even possible acceleration. And possible acceleration is going to come from the behaviors of the consensus, because if the price is going to start continue going up, consensus might be caught on the wrong side of the trade, and they will have to capitulate their ideas about this being the top and jump on the board and push the price even higher. All right, Bruce, I think that we have one more slide here. We've talked about, how's it possible within the context of the much larger uptrend to have those type of reactions that are indicative of some supply coming in, reversals, where, people are reacting to those as potential very major tops in the market, and yet the market recovers and continues going up. What is behind that, the whole factory of the uptrend?
Well, in the case of this chart, I think this is a very provocative point about what could be next for the market as a whole. And this goes to the sentiment issue, is that, and we're going to have to stop the recording here in just a few seconds. And so we'll officially say our goodbyes now. But if you're on the YouTube watching this on demand, we're going to continue and finish this discussion, which can carry on into past the time slot that we have. So just the idea here is that we can have rotation in markets, and this is one of the ways that you can frustrate the majority of traders, especially with the extreme sentiment readings that we currently are looking at, is that you rotate in interest away from one sector of the market, say the growth sector, and you have it start to go into the value sector or the small cap sector. Russell 2000 represents both of those things. It represents value and small cap. you can see from this chart, which is a ratio of the Russell 2000 to the growth stock Nasdaq 100, that since March, when the very important uptrend in the Nasdaq 100 started, that the Russell has gone from being in a long-term confirmed downtrend into a sideways trading range on this sentiment chart, or on this chart of the ratio of performance of these two different indexes. And so really for much of the year now, the Russell is starting to perform with the Nasdaq. And this is a demonstration of rotation. And so this could go on for a long period of time to come. But as long as this ratio is performing in a trading range like this, it says that there's as much opportunity in the Russell as there is in the Nasdaq. And if the Russell starts to outperform the Nasdaq, we as traders want to start to focus our attention on where the relative outperformance is. Ramon?
Well, this was great, Bruce, and that concludes our episode. I think it was awesome.
I do too. And thank you all for being here. And thank you, Roman, and for being our special guest today. And also do go check out the free webinars that Roman is going to be conducting in the new year.
Thank you,
And
Bruce.
with that, we'll say goodbye.
Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.